This is Scott Becker with the Becker Private Equity and Business Minute podcast. Today we're discussing the Bane Report on private equity for 2023 that was just released today, and sort of 5 or 6 key points from the annual Bane Private Equity Report. And Bane, of course, Bane Capital, one of the best in the business, so we follow what they're saying closely. First, for 2022, the essentially global buyouts were down 35% last year to $654 billion. This is still a very busy year by all accounts, but not as busy by any stretch as 2021, which is a complete record year. Second, alternative asset managers raised $1.3 trillion last year. And the alternative assets, private equity, venture capital, real estate, a lot of different things fit into that category, everything but sort of publicly traded companies and so forth. But serious numbers there, $1.3 trillion. So still lots and lots of dry powder left to put to work. And we'll talk about dry powder in a second, because Bane reports it as a record number when you talk about everything, private credit, private equity, private debt, everything. So we'll talk about that in a second. Third, as I noted a moment ago, 2022, even though it slowed down at the end of 2022, was still an incredible busy year by historic standards, but nothing like 2021, which was a record year of all years. Fourth, dry powder, and you see different numbers of this. The Bane reported numbers, $3.7 trillion overall. Usually I see numbers like $1.3 trillion, $1.5 trillion. This number must include all private debt as well, and other commitments and so forth. But that's a huge amount of money sitting on the sidelines, waiting for interest rates to sort of stabilize or soften a little bit, so where people are a little bit more ready to invest. But it really talks to the institutional nature of private equity and how much money there is that's part of that economy. Think about the U.S. economy is about $28 trillion a year, somewhere in there. The Chinese economy is about $7-8 trillion a year. To give context, this is $4 trillion almost that private equity, private debt, and the whole alternative asset universe is sitting on to invest in. It's an incredible amount of money. The fifth note on the Bane report is the exit market remains very challenging, and that's partly because multiples are down. Over the last 10 years, a lot of value has been created through simply multiples going up, which is different than true value creation, but it's created one way or the other. Now, as multiples soften some, they soften at private equity valuations, they soften in the public markets, you see people a little bit slower to try and exit unless they have to at this point, unless they really find something compelling to exit into. So you see that slowing down. I guess the good news that Bane says is they expect deal activity to increase in the second half of 2023. Many of those, whether bankers, advisors, accountants, lawyers, are busy this year, but nowhere as busy as they were in 2022 or 2021. So that note from Bane about the expectation that activity will increase in the second half, plus the sheer volume of committed capital that's not been deployed, is simply amazing numbers that also leads to expectation that sooner or later you'll see deal activity really increase and pump up the volume on. Thank you for listening to the Becker Private Equity and Business Minute podcast. Thank you to our magnificent producer, Grace Keller. Thank you very much for joining us.